And it's another trading day right here in Lagos, Nigeria. Time to take a look at how your money is performing at intraday. Coming up in the next 25 minutes. Egyptian government announces minimum wage increase. Interesting fact is that it's during elections. And the Kenya Revenue Authority reports 1 trillion in revenue collection between July and December 8th, 2023. And Tanzania is gearing up for significant expansion of its petroleum product storage facilities, aiming to address growing demand. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at how money is performing at intraday. Starting on the African continent, we see the NGX there marginally up 0.03% to start intraday today. And we see South Africa's down on the flip side, 0.31%. Other markets we track in North Africa there, we see the EGX that's up 0.40%, while Kenya closed negative, marginal, 0.09% to close yesterday. Let's take it on to the Middle East now. See sentiments right there in the UAE is quite mixed, with the Abu Dhabi index up marginally 0.02%, while the Dubai index, that's down a big 0.28% at intraday. Other markets we track in the region, that's Saudi Arabia and Qatari index. We see Saudi Arabia up 0.02%, another marginal increase there, while the Qatari index, big drop there, 0.87%, almost 1%. So that's the picture there in the Middle East. Let's get a check on what's happening in the UK now. It's all about politics and refugee issues at this time. Join us from our London studios, Juliana. Great to have you, Juliana. So we see British Prime Minister Rishi Sunak faces the biggest parliamentary test of his premiership. Tell us about this.
Yeah, you're absolutely right. In fact, just a couple of minutes ago, Laddie, a debate kicked off in the Palace of Westminster about the controversial Rwanda bill. You'll remember a couple of weeks ago, the Home Secretary, the new Home Secretary, James Cleverly, flew to Kigali to renew this Rwanda scheme, which would basically see any illegal migrants that come across the channel, whether it's on a dinghy or in the back of a lorry, basically removed from the UK, banned from ever returning here and sent to Rwanda. Now, of course, that went through several legal challenges in the courts, and then the Supreme Court ruled that actually Rwanda is not a safe destination. Now, according to the Prime Minister, Rishi Sunak, and James Cleverly, this new emergency legislation which they have drafted would be suitable for the Supreme Court to actually deem Rwanda a safe country. But, of course, there is controversy on all sides, not just human rights campaigners and the Labour Party, who basically say, you know, that it's completely unacceptable, and some people have even likened it to human trafficking in a legal way, but then also it's calls to stir within the Conservative Party that's actually divided at the moment into 5 different wings, particularly those on the extreme right who basically don't think the bill goes far enough. And that was led by Robert Jenrick, who was the immigration minister. He obviously resigns quite spectacularly, and he's aligned with Suella Braverman, the former Home Secretary, who some people say is going for Rishi Sunak's top job. So, you know, it's going to be very difficult for the Prime Minister this evening. I believe at the moment the Conservative Party have a majority in Parliament of about 56, 57 MPs, far less than what Boris Johnson had in 2019 when he won that resounding election, because so many have quit or been sacked since that time. Now, so they're debating the bill in the House of Commons at the moment. It is to go to a vote, I believe, at about 7 o'clock. And if he loses this vote, then, you know, commentators are saying it's basically over for him, that he has lost the respect and the confidence of his own MPs. It's 50-50. From what I've seen, about 15 MPs say they're not going to, of his own MPs say they're not going to vote for this bill. But I believe there have been several breakfast meetings this morning in Downing Street. Rishi Sunak's spokesperson himself has said that they're doing whatever they can. They're using all apparatus and tools in the Conservative Party to try and persuade rebellious MPs not to abstain and to vote in favour of the government. There were some famous words he said last week, which was "unite or die," which I think Boris Johnson stirred up. But Rishi Sunak has repeated them. So let's just wait and see. British politics is typically box office at the moment, and we're going to have a blockbuster showing this evening.
Yeah, I'll definitely be looking out for that. Definitely a wait and see moment at this time. But we have some data out today. The Office for National Statistics reported basic pay was about 7.3% higher compared to the same period last year. Help us break down this new data.
Yeah, that's right. This is all linked to labour market data, which was released this morning, Laddie, by the Office for National Statistics, basically looking at the last quarter. The main headline is that unemployment remains unchanged at 4.2%, which is pretty good, something that Jeremy Hunt, the Chancellor, was very happy about when he spoke to reporters earlier. If you look at that figure universally, it shows that Britain really is in top tier when it comes to the labour market. Most people are working at the moment, but then I think, the wage growth data causing slight concern. Of course, if you are one of the lucky few, I don't know anyone who's had a significant pay rise recently, but according to the data, there is many of them, many of whom just a couple of months ago were putting up banners and, embarking on industrial action. And I think that really is what has led to this pay rise. Industrial action has been taking place across this country for about 12 months. It started off last autumn, leading into the winter of discontent. It went into the new year throughout summer. In fact, there are some train strikes taking place at the moment, but the government and bosses did have to budge because, of course, you can't disrupt the nation for a few more pounds in your back pocket. So lots of people have been given pay rises. The only issue is, of course, we know that in most scenarios, if you are increasing pay for a significant part of the population, prices do rise. And that's what the Bank of England are trying to push down. So let's just see how they are going to react to the data today from the ONS and the all-important inflation data tomorrow, which is going to be significant. I know we're getting US inflation data in a couple of hours, but the last Monetary Policy Committee gathering at Threadneedle Street takes place on Thursday. And of course, we know that the governor, Andrew Bailey, is looking at this forensic data to determine whether or not there will be a further hike of interest rates. I think economists say they're expecting it to remain unchanged at 5.25%.
Right. It is definitely inflation reporting season at this time, but it's good. We've seen inflation trending downward in countries like the UK and the US, but we'll definitely be looking out for the new data. But how are the markets looking at intraday?
Tip-top shape at intraday. The FTSE All Shares up by 0.54%. The FTSE 100 up by 0.71%. And the FTSE 250, the domestic market, that's up by 0.25%. In the currencies market, the British pound also trading up against the US dollar by 0.14%. It is also trading up against the euro and trading up against the Japanese yen too, Laddie.
Always great having you report, Juliana. Thank you so much. See you tomorrow.
Thank you. See you tomorrow.
All right, let's take it on to Europe now. To many people, it seemed ironic to hold the latest UN climate summit in the United Arab Emirates, not exactly known to be at the forefront of the fight against climate change. Well, Lars Holter with Deutsche Welle joins us from Berlin to give us a perspective from Europe. Great to have you, Lars. So COP28 is over. What has been achieved?
Thanks for having me, Ladi. Well, relatively little, it seems, once again. So little, in fact, that Germany, the EU, and a group of other countries actually rejected the summit's final paper. And that's quite a disappointment, given what the climate summit was trying to achieve, which is, of course, to unite countries around the globe behind the fight against climate change and ask them to take serious steps that hurt and that can obviously cut into profitable business. Now, the deal the UN's climate body laid out before global leaders includes a long list of measures to reduce greenhouse gas emissions and slow down global warming, but it leaves out what many had been desperately hoping for, the call to finally phase out fossil fuels entirely. So what's in the deal? A promise for countries to triple renewable energy capacity, a promise to accelerate efforts towards net zero emissions energy systems, and, well, a promise to reduce dependency on fossil fuels. So that definitely goes in the right direction, but it's all not very concrete. And here's one item I stumbled over. A paragraph in the COP28 paper calls for a, quote, phasing out inefficient fossil fuel subsidies that encourage wasteful consumption. Now, that seems to be a no-brainer, that you would end inefficient measures and try not to be particularly wasteful. I would hardly call that a breakthrough.
Right, definitely so many pledges there. But what were the main sticking points this time?
Well, much of it was oil, of course, and that's not just because the summit was held in the United Arab Emirates. We can look at large parts of the world to see how much of a role oil is still playing for some countries. Look at Russia, for example, where it helps finance a war. In Venezuela, we're looking at a new conflict over oil reserves discovered in neighboring Guyana. In the US, Donald Trump just last week said he would make drill, drill, drill a theme of his agenda for day one, if, God forbid, he would be sent to the White House again. China, Iraq, India, and Saudi Arabia also voted against phasing out oil entirely. So that's a problem right there. But it's also not only oil, there's coal as well. The final paper would technically not only allow for more energy from coal, but even allow the construction of new coal-fired power plants. It would be totally against Germany's own energy policy, of course, and against everything we know about what really has to happen to slow down global warming and climate change. For now, by the way, not all is said and done in Dubai. Leaders are meeting once again today, even though the summit was supposed to end yesterday. And Germany and some other countries are at least trying to put a stronger commitment towards phasing out fossil fuels back into the paper.
Yeah, so much to phase out there. But what are investors looking at today's markets?
Yeah, things are looking up in Asia and Europe, but the most market-moving data is still ahead. That would be US inflation data coming out just one day now before the Fed is coming together for its last interest rate policy decision of the year. The Fed's inflation target, as we know, is 2%, so everyone will pay close attention to what happened to consumer prices in the past month. Recent updates have shown inflation slowing down, labor market softening a bit, but there's not much fear of a recession at the same time, so investors are hoping for the Fed to cut rates next year up to 4 times by latest market estimates. But as I said, we'll know a bit more as the week happens.
All right, definitely looking out for those numbers. Thank you so much. That's Lars Holter right there in Berlin. Let's take it on to the U.S. now. See stock futures rose slightly today as Wall Street looks to see if the market rally can power through another round of inflation data. Futures tied to the Dow Jones Industrial Average ticked up by 51 points, by 0.1% there, 36,869 points for the Dow Jones Industrial Average. S&P 500 futures, that's marginally up 0.07% at 4,682 points. We see the tech-heavy NASDAQ there, 16,474 points, up 0.15%. We're still waiting there to see how inflation played out in November. Analysts expecting 3.1%. So that's a consensus for U.S. inflation in November. We'll definitely be looking out for those numbers. Well, we'll take a break now. When we come back, commodities market update is next. Do stay with us. To raise the minimum wage by private sector to 3,500 Egyptian pounds a month from January 1st, according to a notice in their official gazette there. The last time the government increased the minimum wage was on July the 1st, when it set it at £3,000. Headline inflation in Egypt has risen sharply over the past 2 years, reaching a record 38% in September before slipping to 35.6% in November. Meanwhile, Egyptians voted Monday on the second and penultimate day of a presidential election, which Abdel Fattah al-Sisi is expected to sweep to a third six-year term amid a grinding economic crisis and war on Egypt's border in Gaza. And the Kenya Revenue Authority has collected about 1 trillion shillings in revenue between July and December 8th, 2023. The high revenue, despite the depreciation of the Kenyan shilling among major global currencies such as the US dollar, we see inflation and a weak demand among other issues. For example, between July and November, the Kenyan unit lost 22% of its value to the greenback. KRA said in a statement, revenue performance was also affected by low domestic demand, as indicated by slowed purchasing managers index that averaged at 47.18 points in July, and November 2023 down from 48.66 points in July, November 2022. And Tanzania is gearing up for a significant expansion of its petroleum product storage facilities, aiming to address growing demand and ensure fuel security in the face of volatile global prices. The Petroleum Bulk Procurement Agency announced plans for a major warehouse expansion project driven by the current capacity struggling to keep pace with the country's rising fuel consumption. The existing infrastructure, built when fuel imports were significantly lower, is causing delays in offloading at the Dar es Salaam port, impacting efficiency and supply chains. The PBA executive director told newsmen that the absence of a large storage facility has been causing ships to take a long time to offload fuel at the Dar es Salaam port, and that the contract for the construction of a huge warehouse will be signed later this month. And now let's look at some commodities now. See, India, a major player in the global onion market and one of the largest onion exporters, recently placed an export ban on its onion exports until March 31st, 2024. Same thing with Egypt. This measure aims to enhance the local availability of the vegetable. And see there, the top exporter of onions in 2023, there we see India topping that with 819,000 shipments. China follows in second, and we see the Netherlands there, 52,781 shipments in 2023. That's up to November. Well, joining us now is Miriam Ode, analyst, financial derivatives company. Great to have you on the show, Miriam. Right, so seeing that India is a big player there in the global onion market, that they contribute over 12% right now to the market. What effect will this export ban have on the global market and supply at this time?
Well, Ladi, like you said, India is actually a major player in the onion market, accounting for 12% of global onion trade and even 15% of total exports of onions globally. And what we're going to see is that this ban is because it's a total ban, meaning that there is no export of onions from the country to other countries. So this would restrict the global supply of onions, and resultantly, we expect to see an increase in the price of the commodity, especially among neighboring countries. That's India's neighboring countries. And already in neighboring countries like Nepal, Bangladesh, Maldives, we're seeing that the prices of onions in these countries have increased as a result of this India's ban on its onions exports. But if we're talking about like other countries that are non-neighboring, we see that China, which is also another key onion exporter, we're seeing that they are battling with low onion production due to the erratic weather conditions in the region. And this is reducing the supply of global onions, which is expected to increase the price not only in China, but also in any country that relies on its exports. So China is seeing reduced production. We're also seeing reduced production in India. That's limited exports from India. And then you mentioned Egypt, which is the largest producer of onions in Africa. We're seeing that they extended their 3-month ban in October. So we're seeing basically limited supply from everywhere. And as a result, we expect to see that the price of onions in countries that rely on these exports to increase too.
Right, and talking about increasing prices, we've seen right here in Nigeria, the price of a 50 kg bag of onions has climbed about 21.73% from 115,000 naira a bag to 140,000 in December. And we're hearing it's naira devaluation causing this. And I'm wondering how is this? Because we're producing it here. So how's that playing into price increase, or it's just general food inflation?
Well, Ladi, you will agree with me that this is December, and December time is money time.
Right.
Prices of most commodities increase, except for commodities, of course, that this is their harvest season. We see that they begin to decline. And this is the trend for onions. We see even last year, the price of onions in December 2022 increased to 65,000 naira per bag from 46 in the previous month. And this year, we're seeing that it has increased to 140,000 naira for a 50 kg bag, from 115,000 naira per bag in November of this year. And the major reason is seasonality, because this is not the harvest season for onions. The harvest season for onions is around May, and this is the time when we usually see like a price decline in onions. And so but when we hear that the price of onions has increased because of the dollar, it's not necessarily a direct impact on the price of onions domestically, but rather an indirect impact on the supply of onions. Because if you put yourself in the shoes of these producers, once the dollar strengthens in the global market, it becomes Nigeria has a more competitive advantage to export this commodity. But remember that Nigeria's border is closed, meaning that we can't necessarily export onions to other countries. So what this would do, the increase in the value of the dollar, instead of increasing the level of onions exports, we would see an increase in the level of smuggling of this commodity, that's onions, from Nigeria to other neighboring countries. And what this does is that it reduces the domestic supply of onions and resultantly cause a spike in its price. So this is why the rising value of the dollar is trickling into the domestic price of onions, but not necessarily because, dollar is increasing, so therefore the domestic price of onions is increasing, because like you said, there is no import content used in the production of onions domestically.
Right. I guess that's one of the issues there, when you have the double whammy of inflation and currency devaluation hitting your economy at the same time. Thank you so much. It was great having you, Miriam Ode, analyst at Financial Derivatives Company. Thank you.
Thank you, Ladi, for having me.
All right, so those are the top stories, and that's how your money performed that intraday. Thank you so much for watching. I'm Ladi Williams. Bye for now.